Alright guys, in this video I'll walk you through a short trade I took recently and explain how I identified it as a high quality setup. Now, to do this I relied, as I often do actually, on Wyckoff's 4 phases of price movement, which obviously are, as we all know, accumulation, markup, distribution, and markdown. I think that, before jumping into any trade, it's super important, honestly a must if you want to really stack those gains. To analyze the chart at a granular level and understand at the same time the price's current position and how that position actually plays out within these phases. Now, for this particular trade here, I made two key decisions. So the first one was I opted for the 5-minute chart instead of my usual 1 minute or 3-minute time frame. Why? Well, because the 5-minute chart not only provided, as you can actually see here, a clear view of this well-developed structure, but also acted at the same time as a better filter in terms of helping me figure out a more sort of precise area of interest and eventually an entry point. So let's start down here where the market was stuck in a sideways grind for about 5 hours before finally breaking out around the 930 level. Now, if you look at the stair-stepping pattern during this long and clearly boring consolidation phase, you'll notice that the breakout marked by this roughly 50-point impulsive demand bar aligns with the ascending trend line. Now, this breakout obviously signals the beginning of a new trading range, marking a shift here in market dynamics. Also, pay close attention how the impulsive bar gets its base from the support provided by the ascending trend line, as well as a bullish order block we have here. And these are clearly both elements that reinforce the significance of this emerging range. Now, here I say emerging range, assuming the structure above this point hasn't fully developed yet. Now, what does that mean? Well, guys, my point is that, even though the market seems to have a bullish bias as a result of this spike, we don't jump in just yet. Instead, we stay patient, we don't rush, we just observe and wait for the market to actually build out more structure. Why? Well, because the more detailed that structure is, the better. That's how you'll spot usually solid trading opportunities. In fact, in my view, it is the only way to actually identify high quality setups. And guys, as I always stress in my videos, it's fine, to have a bias and everything, but you should only enter a trade when your setup confirms itself. And here we only have, as you can see, a range formation and nothing more. Now, as the market pushes above here and then reverses just above the 45 level and begins dumping, here at this point I thought if this move signals the top of the range, then this 40 some point drop could mark the cap, provided it's not a fake out. At the same time, I gotta say here that this move, whether it was fake or not, brought the Wyckoff cycle into play with its 4 phases of price movement that I mentioned at the start of the video. Now, what's interesting here is that, based on the 45 level reversal, I could now identify the accumulation phase followed by the markup and distribution phases. The markdown phase clearly here seemed to be underway after the break of structure around the 010 level. So this is the point where I start seeing signs of a possible interesting setup forming. However, at the same time here, I had to keep in mind the fact that narrow distribution phases, especially following prolonged consolidation like this one, can sometimes act as reaccumulation zones for market makers. In other words, you'll see moves like these that really look promising, start gaining momentum, and then all of a sudden they simply stop. And I totally here understand that what I'm saying, particularly when it involves critical price action patterns like structural breaks, may contradict conventional wisdom. But this approach has actually, and I should say consistently, proven effective for me. So rather than, shorting at the 19 level and entering into this imbalance zone, I chose to stay out of the market and keep observing. This decision was again based on the narrow distribution phase dynamic and the fact that the decline didn't align with the pattern of a market maker driven stop hunting zone. In contrast, the move up here fit that model perfectly, as you can see. I mean, do you guys see what I'm saying here? I mean, do you like really see the difference here? This is why I always stress that patience is absolutely crucial in trading. So at this point, my thinking was to try to anticipate the direction and magnitude of the next move based on the exhaustion of this 180 point trading range. With the markdown phase now clearly identifiable, all I needed was to pinpoint an entry level for my short. Now, at the same time here, take a moment and consider why I placed my short where I did. What do you think prompted that decision? Just take your time here. Well, the answer is simple. First, we had a stop hunt zone marking the top of our range, which is based on the idea that stop hunts typically occur near downtrend lows or uptrend highs. At the same time, this successful resistance level qualified as part of the distribution phase. Following that, we see a throwback that led to a break-off structure at the 44 level. This breakdown created here now a clean imbalance zone, which was my cue to enter the market short and signal at the same time the start of the markdown phase. As you can see, the market continued steadily pushing lower through the range. Obviously here, not all of my targets were hit, but what mattered most was being on the right side of the market. In fact, after I closed the trade, the market kept dropping further, reaffirming my bearish bias. And at this point, guys, yes, making money is great, but for me, there is nothing more satisfying than outmaneuvering market makers at their own freaking game. By the way, guys, if you found this trade breakdown useful, please make sure to check out my next video. Alright, gang, thanks for watching, and as always, hope to catch you all in the next one.